welcome back to the Broker Life podcast. My name is Mark Panzon, and I'm a mortgage broker with Mortgage Connection. I'm a licensed broker in Alberta and BC, and I've been doing mortgages for over 15 years. This is a special episode today as we have the founding fathers of Mortgage Connection as our guests today. Josh, Joe, and Robbie are the managing partners at Mortgage Connection. They have a combined 50 plus years of mortgage industry experience and all manage their own mortgage book. Mortgage Connection is licensed in Alberta, BC, Saskatchewan, Manitoba, and Ontario, and is one of the fastest growing brokerages in Canada since it came to existence. So welcome to the show, gentlemen.
Thanks, Mark.
Thanks for having us, Mark.
Yes, Mark.
I feel like I'm on Shark Tank here or Dragon's Den, and I just got all three dragons in one shot here.
Give us your pitch.
Yeah. Right. So let's get right into it. Let's maybe start how the three of you guys met and then eventually sort of came to found Mortgage Connection. So Joe, I guess we'll start with you.
Sure. We met just through the industry, and we all were actually at another brokerage. So we were all active mortgage brokers. We were at existing mortgage brokerage and just felt that there were some missing pieces in the industry and that we could maybe do it a little differently than it was being done. And I guess Robbie was really the catalyst of it. He and Josh met up just randomly after a hockey game, and I got a late night email saying we should talk. So it was a start to a great journey and relationship, but I'll give a lot of credit to Robbie. He must have had the master plan built in his head, which wouldn't surprise me if he did before it all came together. But that's really the story and how it happened.
Yeah, really a late night, early morning email, but I think that was actually probably about a year before we actually launched. So we definitely spent the year planning and making sure that when we do launch, we do it right. And so we met with a Big Four accounting firm at the time. We had an independent business consultant. We had one of the top legal teams here in Calgary, and we really wanted to make sure that when we do launch Mortgage Connection, which we ended up doing in 2018, we do it uniquely. We do something a little bit different in the industry.
I'd like to add just quickly too, I think a big catalyst for it as well was those rule changes in late 2016. Correct me if I'm wrong, gentlemen, but that's as those changes came down the pipe, probably the largest that still to date that we've ever seen in Canadian history in the mortgage lending space. We saw a need for some change, a different direction of leadership. We felt leaders that were a little bit more involved in the day-to-day operations or in the trenches, so to speak, doing mortgages themselves. So that's what started the conversation late night after I think a disappointing Flames game. Correct me if I'm wrong, Robbie. But
They normally are.
Yeah.
No comment there. So have you guys known each other before you were in industry, or you just all met through different industry events and things?
All through industry.
Yeah.
Interesting. So three powerhouse brokers came together and made a plan and said, let's do it differently. And a couple years later, here we have Mortgage Connection.
Correct.
That's it, my man.
Awesome. So I want to talk about the partnership with DLC. But before I do, how old is MOCO? How many years are you guys in?
MOCO is just over 5 years old.
Jeez, just a baby.
Mm-hmm.
And so much growth. So you've been I'm going to guess like 3 years as MOCO, and then the last 2, I think you decided to partner up with DLC, something like that.
Yeah, absolutely. And DLC, in working with them, we're still very much MOCO, but yeah, partnered up with DLC and under their umbrella.
So what's the big advantage to partner up with DLC? Because you guys were doing great, obviously some massive growth. Does Dominion Lending Centers, just the network, allow you to reach more people? Is it more lenders? What's so special about partnering up with DLC?
I'd say one of the unique things about DLC is one of the things that attracted us to DLC is having a similar mentality when it comes to commitment for growth. DLC is relentless in trying to make DLC more powerful and better. And so, our philosophy with Mortgage Connection is to make ourselves as strong, our brokers as powerful, to be the very best. And so, that mentality aligned, and I'd say that was one of the bigger attractions to DLC for sure.
as well as their leadership group, Robbie. Hey, you had like, we believe they've got the strongest leadership group in the country. And so the people that they've assembled who truly care, you know, we have so many of them who reach out to us, see how we're doing, you know, what can we do to help? What do you guys need? And basically anything they've ever promised, they've fulfilled. So we found them just to have an incredible group from the top, and yeah, they're, you know, quite frankly, I think they're pretty inspiring. So
the only thing I'd add to that, Mark, is kind of we saw a need that being a very, very large brokerage is necessary in the Canadian space right now. And we were seeing a lot of smaller shops that were, you know, sub 200 million, that were maybe a ma and pa style brokerage, not being able to be competitive. So that trickles down to agents in that brokerage not being competitive because they don't have access to the same lenders, they don't have access to the same pricing and underwriting. And so we had an idea of being big, not for the sake of being big, but to make sure that we would have all the advantages for our brokers that make us what we are. And DLC was very much in favor of us having that kind of growth mindset. We kind of laughed that we were at the point, you know, 3 years into MOCO where we didn't know any other brokers. All of our friends had joined. So we needed help to find the good people. Mark, you're a prime example of that. We didn't know you as a broker, and through us coming to DLC, we were introduced to you. And there's tons of stories like you that have happened. So it really has helped us, you know, spread our wings or our web on what we're able to, you know, who we're able to connect with. So that's been a huge catalyst for our growth, is having that relationship with the DLC to make those introductions to great brokers in areas that we maybe didn't know.
What you said there, JJ, and sorry, Mark, just talking about being big, like we are very forthcoming right from the beginning, Mark. We wanted to be big. We built, Robbie said it took about a year before we launched. We wanted to be different, and we built out what we believe to be a foundation to create a very large brokerage. And not large just for the purpose of saying, oh, this is our volume and pounding our chest. That's not what we're about. It's about being able to offer the brokers, and then the client, you know, it trickles down to the client, the most competitive offerings in the industry. And with that comes commitments to lenders that if you're a small shop, you just can't achieve, right? Certain volumes and efficiencies help you get those preferential underwriting practices and rates and just lender access as a whole. So we wanted to be big out of the gates, and yeah, we got some pretty good traction right from the onset. So
yeah, this really resonates with me. You know, I was 10 years at CIBC, and we had the big brand, we had the big events, the big budgets, but we just had one product, and also the comp was really bad. So, you know, it was time for a change, and I knew when I was approached by Sean at DLC that I thought that was the next stage for my career, and so he set me up with a smaller brokerage in Edmonton. And I immediately saw the impact that multiple lenders would have, and how that impacts our clients, how competitive we can be. But they were still a small brokerage, so we really didn't have the best offers in the market or the best underwriters, or the fastest turnaround times. So enter Mortgage Connection. In my mind, it was a marriage of both worlds. It's a big brand, especially with DLC behind MOCO. So it's like two big brands. And then now all these extra products, top underwriters, as you mentioned. So yeah, I mean, that really, really resonates with me, and I'm so happy to be part of the team, and I can't see myself leaving anytime soon. So thank you guys.
We appreciate that, Mark, and you. So thank you.
I want to talk about the 3 pillars of MOCO: culture, collaboration, community. Maybe we can split this up, and you can each sort of quickly just touch on each of them. So how'd you come up with it? Why is it important? What does it mean? Robbie, you want to start maybe?
Yeah, absolutely. You know, we feel like culture is often a word that's put out there by many different organizations, and you know, the culture at Mortgage Connection is really everyone being givers and trying to help each other be better. And you know, we often say, yeah, we're a very, very large group, but it really is a group that loves to be around each other, and that's what truly makes the group different and makes the group special.
Okay. Josh, what about, you want to take one of those on?
So culture, yeah, I like what you said there, Robbie. Joe, I'll let you take community. because I know
Sure.
that one's near and dear, and you've got the white hat, buddy, so I can't take that from you. So that leaves us with collaboration. You know, it was really interesting, Mark, when we came together and built this, we had a year of basically every Sunday. Our poor families didn't see us for a Sunday for a long time, where we were modeling and building and how can we be different. And, you know, with collaboration, we looked at the brokerage models, and what we find in the brokerages is typically you're in a brokerage house, but you're very much on your own. You know, you've got all these sub brands of brokers trying to build their own brand and build their own business, which we understand and we get, but we figured, why couldn't we build something that everybody wants to get behind? Instead of, you know, at the time I was Hegelke Mortgage Group, and Joe was Mortgage Connection at X brokerage, and Robbie was the Robbie Aurora mortgage team. And we still see that within Mortgage Connection on a smaller scale, though. They want to push the brand more because there's more for everyone. You know, we generate leads as a group, and those leads go out. We help each other in a very, very big way to get deals done and across the line. There's a number of different facets. If you had a deal in our shop, you could message the team and you get 10, 12 answers back from brokers and top brokers who just had that deal, or you know, maybe within the last month or so. We have that ownership component, which you know about, and I don't know how far we want to dive in on that, but it was built so that truly we lift each other up. We all help each other get deals done. We all benefit from the brand. We all have ownership in the brand, and it's actually true collaboration. Yeah, there, boom.
Sold me, Josh.
Well said.
I'm going to just kind of take a step back on kind of the overarching first question, and then I'll talk on the community piece, saying like, how do we come up with these three kind of pillars, these three C's? It really did happen in meetings in a boardroom when we were hashing out, okay, do we want to do this if we're going to build a brokerage? I think the simplest thing that led to it, and it's probably why it led to our partnership, is we very quickly realized how aligned we were as humans and as potential business partners on what we care about and where we think value is in doing a business. So we literally had kind of, what are the hills you will die on? What will make this partnership not work? And the three kind of big ticket items that came out were those three pillars. That if we're going to do this, we don't want a bunch of individuals that have egos, that don't want to be givers. So that's the collaboration part. We want to build a brokerage that does have that true connection and feel of you're part of something. So that's the culture. The culture literally was built by the brokers. It's not built by us. We always say we're the custodians of that culture. It's our people that make it happen, but it's a pretty big responsibility to keep it because it's a beautiful thing that has been built by everyone that makes it up. And then that last piece was community, where we basically said, okay, if we do this right, we're going to have a great business. People are going to have incredible opportunity as brokers here. We're going to help a lot of clients, and people become home ownership, have home ownership, become homeowners. But there's a bigger piece here where we can actually be stewards to the community. And as a company that's going places and doing things, that was huge to us. So we also use it as a bit of a litmus test because we do a lot of community involvement. And if a broker's not interested in that, they're probably not the right fit for us. So, you know, if you come in here and say, I hate the fact that you want to give back to the communities that we do wonderful things for, it's a pretty good sign that you're probably not the right fit for our shop. And we've had a couple of people that, you know, we'd interviewed and that was something they didn't like, and they've never become mortgage brokers at Mortgage Connection. So, but really it was those meetings that Josh alluded to that led to kind of those three core things, because they were just where we kept coming to from our alignment standpoint.
I love all that, guys. That's beautiful stuff there. And it makes sense. And even again, just to relate it back to my own experience, when I was with the small shop, not knowing anything about the brokerage network, I immediately created my brand. I was MP Mortgage Group, and I just thought that's what you did. You're just trying to be different, and you're trying to represent yourself, build your own personal brand. And I didn't even think twice about it. And then I come over to MOCO, and it was like, I'm good. I love the brand. I'll stick with it, and I want to push and support this brand. So it's funny sometimes how those things just sort of work themselves out. But obviously, you guys have done a great job of showcasing or building the brand and the three pillars, and just getting brokers to buy into the overall message and what the goals are. And it's great. I love it, and I think you guys are amazing.
But you've done a great job of it, Mark. It's Joe said it. It's the brokers who have done it, and the brokers have taken ownership of it. Like the three of us never came up with the term MOCO. That was the brokers. And it's one thing I'll add to all that is, there's a fourth C, and really I think, and it's complement. Like the three C's complement each other so well. That just was a byproduct of all this. Like when you have that community give back, that creates a culture. Right. And then when you have that culture, everyone just wants to collaborate and help and share. And then, and again, as you're doing the community give back in the right way, and you're in the light of the community as the group that does give back, that also helps with the brand. Right. And it just all has worked so well together, better than we could have imagined, I think.
Yeah, totally agree. Let's talk about growth. So you've been around for around 5 years or so. The pace of growth seems exponential, especially when you consider GenCore recently jumping on board as well. Can you just share a little bit about how fast this brokerage is growing, and just explain to the people how unusual maybe that is, how fast you're growing? I mean, when I first started just 2 years ago, I think you had, these numbers could be wrong, I think it was like 60 or 70 brokers or something. I think you're probably double that in that amount of time. So does anybody want to chime in on the growth piece?
Yeah, so I mean, growth is important. To be able to continue to provide everything to the entire group, to provide the best when it comes to lenders, when it comes to top underwriting. Growth is very, very important, but we want to make sure always that we're growing with the right people. And so we're very, very conscientious about that. You're right, that's been the pace of growth. The pace of growth has been exponential here, but we shared this point in Nashville at our last kind of big Mortgage Connection trip, that just as many brokers that we said yes to at that time in that year, that was September 2022, we had said no to about an equal amount, because as Joe had alluded to, if you're not a giver, you're not a good fit here at Mortgage Connection. So though the pace of growth has been exponential, we are very, very careful about maintaining those three pillars. So, you have to be a fit within Mortgage Connection's culture. You can't be holding all your trade secrets to yourself. You have to be a giver and a sharer with the rest of the team, and giving back to the community has to be important for you. So absolutely, we want to continue this path and this trajectory of growth. But again, only with the right brokers and the right way. And I think with having that philosophy, that psychology, or that mentality, sorry, that's further attracted more and more of the best brokers in the industry, because they look at the group, and again, not us, but the brokers that make up Mortgage Connection, the people that make up Mortgage Connection, and they're really, really attracted to that, to be different and to really be the exception in the mortgage industry.
We like to say, Mark, awesome attracts awesome. Now, we're not saying we're awesome, but we have awesome people at Mortgage Connection, and awesome attracts awesome. We have such an incredible culture here and vibe. And Gary Morse likes to say your vibe attracts your tribe, or your vibe is your tribe, something of that nature. But we've seen it. And again, just as the market is a little tougher this year and product, it's important to have all the products and options. That's another reason Joe had mentioned earlier, some of the smaller shops are looking to join a bigger outfit where they have more access for themselves and their brokers, and they look to us because we have such awesome people here.
I mean, the only other thing I would maybe add there, Mark, is just speaking for Josh, myself, and Robbie, is our biggest fear is complacency. So we are relentless in not being complacent. We think the moment you get comfortable, the moment you act like you figured it out, you're dying. So we always want to push to do more, whether that's adding the right people, adding better systems for our team, making this brokerage better. You alluded to, it's still a baby. It's forever going to be our baby. And we feel an immense amount of responsibility to make sure this works for everyone that's had the trust and faith in us. So we're probably just so scared of being complacent that we're always going to push, because we never want to be the guys that just say, okay, we did it. Because I don't think we're ever going to be satisfied that we did it.
I don't think you'll ever hear an interview with any business owner that will make that statement and say, we've made it, we don't have to work any harder. This is the model. We can just lean on this now. I mean, the top entrepreneurs in any society are always pushing the limits, right? So you kind of have to have that mindset if you really want to be something special, right?
We think so, for sure.
A big fear we
Um,
have too is, sorry, Mark, as we grow, is still making sure the brokers of Mortgage Connection still feel like they have that connection with everyone, right? You never want to feel like you're a number in a big organization. So we're always very mindful as we're growing that everybody is still getting the love, really, right? And on the same goal, same vision as to why we're growing and why growing is good.
Okay, so last sort of question about like the MOCO brand is the vision. So I'm just curious, and you know, I think our viewers would be interested to know where do you want to go? What's the vision for the next 5, 10, 15 years, etc. You know, you've expanded quite a bit in Alberta, really. It seems like Edmonton is growing at a pretty significant pace as well. And you guys are out of Calgary. I'm in Victoria. There's people in Ontario. So what's the vision for the growth, I guess, and just the vision of where you want to be in the next, you know, decade or so?
Take it away, Joe.
Yeah, it's a good question because we're definitely Alberta focused, and we have been from day one. We felt that there was a real opportunity to try to take over Alberta and stay close to home. We also think it's a great place to be if you're in the mortgage industry right now compared to some other spots. So certainly that's been our main focus. The other factors, we're not the type that wants to just go into a center if we don't have the right people in that center when we go. So Edmonton, as you alluded to, Mark, we really started to see some momentum and growth there. And that was because we had a couple of catalyst brokers that joined. And once that happened, we had the confidence, okay, we can start building what we've done in Calgary in this center because we have the right people here now. And so we're seeing momentum happen there. You know, we are in Ontario. We've got a team in Thunder Bay, which seems a little strange to a brokerage in Alberta, but it's Josh's old hometown. And Jay out there, who everyone at MOCO loves, has done a remarkable job of, you know, he's 2,000, you know, kilometers away or whatever it is, but he feels like he's just down the street. We are expanding into the GTA in the coming month, so we're not going to just be in Alberta borders, but we're going to do everything very systematically. It really comes down to the people more than the location. So if the right person is there, you know, as you mentioned, we're licensed from BC to Ontario. So if we find the right group or the right broker in a province or a city, we'll go there. But we're not just going to go there for the sake of being there. It has to make sense with the people that are going to, you know, represent the organization in that market.
That's a mic drop, Joe.
I don't know if it's that.
But you're right. We will wait for the right people. We will wait for the right people. We won't enter a marketplace without the right people there. And so everywhere we have gone, we do feel like we know that we have the right people.
Anything else to add there, Josh?
No, that they nailed it. It goes back to the foundation. Like it seems that every time we do something and we make sure we have the right foundation in place first, and the people are the foundation, and especially in markets that aren't our backyard, right? So, nope, the guys nailed it.
I mean, I guess the only other thing I'll say, Mark, is because you were asking, like, what is the 10, 15-year vision? I mean, you know this, and, you know, your viewers probably don't, but our brokers have the opportunity to be owners within Mortgage Connection too. And so it's really important to us that we make sure with owners that we have a very profitable and winning business that they're truly have skin in the game for. So I said this to one of our brokers that asked last year at our shareholder meeting, like, what is your plan? And I was like, well, I guess we'll just be really frank with you. We want to be the biggest and best, full stop. That's the goal. So that's going to take expansion to other provinces. That's going to take, you know, adding more people. It's going to take a lot of stuff, but like it's full steam ahead. We want to be the best, brightest, biggest. That's our goal. And I don't see that changing ever.
Wow, that's a mic drop right there. Right on. Okay, I love that stuff. Let's change the conversation here a little bit. I want to get into the economics. As some of you know, as Robbie may know, I'm a big sort of charts and numbers guy. I'm trying to understand the macro picture all the time. When I was at CIBC, I was just focusing on product and rate, and I was really just a number or a cog in a wheel. It was just you get the deal, you do the deal, and that's it. And I understand why the rates were where they were. I understand the bigger sort of picture. So I've really just tried to be a student of this the last few years. Um, I'm just going to spit out a couple numbers at you guys. I'm not looking for deep analysis here, but just your quick take on what you think's happening. Let's just start with the Calgary and Edmonton markets. So kind of different. Calgary's really what do they had? End of Q1, they had 1.6 months of inventory. So there's no homes for sale in Calgary. The median sale price was about 600K. And in Edmonton, they had 3.5 months worth of inventory, and they're at about 425,000 for average price. Not to mention, about 50,000 people migrated or immigrated into Alberta at the end of Q1. So we have this challenge, or it seems like a challenge in Alberta, specifically Calgary. A lot of people are coming to Calgary. Not enough homes are being built. Interest rates are high. Prices are being driven up. How do you assess the market, and what are you guys seeing from your businesses in terms of how business is flowing in?
Josh, you want to take it? Or
Well,
Robbie? Go ahead.
yeah, it's an interesting market. I don't really, it's tough where to go with that question because it seems it changes day to day the challenges that we're facing, right? There's no question that the demand is stronger than we've ever seen before. It's interesting to see that basically cost of living is a driving factor for migration to the city, right? You're hearing it all the time. I'm sure you are as well, Mark. Like you're hearing people from the GTA, GVA for the last 2.5 years or so moving to Alberta, migrating to Alberta. And a lot of times I'm hearing from them that the number one reason that they're moving is home ownership. They feel that if they don't come now, they may never achieve home ownership in a major center in the country, right? So Calgary kind of lagged as I think maybe the fourth largest center in Canada behind GTA, Montreal, Vancouver, correct? And so we're seeing a lot of that. And yeah, the prices are being driven up. I think last week was one of the hottest real estate markets that Calgary had seen or has experienced. And so we're seeing houses go over value. I've had one set of clients that have written on 24 properties and unsuccessfully because we're seeing those unconditional offers now. And just the bidding wars. So it's really interesting market to navigate this year. I don't know what signs there are of slowing down as interest rates increase. I'm wondering if it's almost driving people further out of Toronto and Vancouver as their values are so much higher. We have a fairly stable, for a change, oil and gas market. We haven't seen that in about a decade or so, where there's still a lot of jobs and job creation there. Calgary itself is becoming quite a transportation hub for goods. So the employment seems strong. The deployment seems strong across the country, but it's a really interesting market. Like we're seeing the government just keeps increasing rates, but job growth stays strong. So I don't know where this one's heading. Again, it's day by day, and you just try to help clients as best as you can. We're seeing again a lot of that 2 and 3 year in my world. For a while, people were going to the 5-year fixed mortgage as rates had seemed to stabilize in those mid 4s. But as we're creeping over 5, I'm getting a lot more questions at the 2 and 3 again, as there's belief these rates should come down based on what we're seeing.
Yeah, it's interesting. The one thing that economists are agreeing on right now, based on the statistics, is that there's supply shortages, housing supply shortage, in all major centers in Canada. And as Josh was just speaking about, as you also mentioned, there's a ton of net migration to this province. And so it's going to be very interesting to see what happens, because you do have a strong quality of life in Calgary and Edmonton. And you have a lot of people coming to this province because of affordability, because they want to get into home ownership. And so what's also happening is that you have lenders that are focused on Alberta as well, because you've got the ability, and I know for the viewer, this may be getting a little bit more detailed, but you have a lot of push by lenders here in Alberta because of the appetite for insured or insurable mortgages. Mortgages stop being insurable when they pass that $1 million home value. So, I mean, here in Alberta, you still have a decent home that the customer or the consumer can get into less than that $1 million price. So you have lenders pushing in these markets as well. And, you know, those supply shortages we were seeing with especially at the start of the year, where, you know, there was a lot of customers that were pre-approved for their mortgage, but they just couldn't find an actual home to purchase. So it is going to be very interesting what happens. There's been a push from the government through the CMHC MLI Select program on multi-unit residential as well, where they're offering up to 95% financing and up to 50-year amortizations because of the supply shortages for housing. So it's going to be very, very interesting to see what happens, and especially in these centers. I do wonder that if, you know, or when the trend changes, nobody knows when the trend's going to change, but when the Bank of Canada decides to kind of move the other way, what actually happens in Alberta? Because we continue to see this strong housing market, and if things trend the other way, I wonder if that just fuels it further.
And based on population, Robbie, I don't think Alberta is really the focus, right? Like they want to cool down the country and cool down inflation. You really got to look at GTA and GVA. So we might just keep humming along here at a nice pace as long as they slow those two markets down. Joe?
Oh man, I'm gonna sound like the cranky old man.
Weird.
I'll do it. I know it's totally weird. The issue, in my opinion, is simply this, that the government has a housing policy and an immigration policy, and they don't connect at all.
Mhm.
And so when you're going to bring in 500,000 immigrants and already have a housing supply shortage across the country and have no ability to increase supply because housing starts and developments are not a government of Canada initiative, they're not even a provincial initiative, they are a civil initiative. So the cities are who determine it. So unless the government figures it out and goes to the major centers and says, here's a bunch of money to get your stuff in line, to get enough housing product, they're never going to catch up. And so I think certain areas, like I think the big centers are still going to have a huge housing issue. You look at a market like Calgary, this time last year, rent was 34% less. So we've seen a 34% increase in rent in our market. That tells you just how bad the housing supply is. So I think Calgary is going to, and Edmonton, I think you're going to see even a bigger bump because now Edmonton's the shining star because you can buy it. There's more supply there. So you're not in the same bidding war. If you have employment in that area, you know, you're going to have a great opportunity for home ownership. So I think Alberta has a little golden window here where you're going to see significant continuation of migration here, just because people are coming to Canada and they're going to be attracted to where there's work. They're going to be attracted to where they possibly can own a home. And you're still seeing a ton of net migration from interprovincial. So I don't think we're going to see anything that slows down housing demand, except maybe interest rates. But the need for shelter outweighs any cost to it. So if you look at how much it costs to rent a 2-bedroom apartment in Calgary, even with rates where they are, it's still better to buy a house.
Mhm.
So, or buy that 2-bedroom. So I just don't see there being a significant slowdown because of rates. Where my concern is the people that are maybe slightly over leveraged in their mortgage could have some real trouble. So what could slow things down is if you actually have people really finally feel that pinch and be like, I can't afford this house. But then where are they going? Because now they're going to rent and pay X amount. So
I read an article the other day about how Mexico is the new favorite place to live, most affordable, most enjoyable. So maybe people are just fleeing Canada in general. I don't know, but I was wondering who was going to bring politics into this because I'm totally in line with this, Joe, and with Josh and Robbie's comments as well. It's easy for someone like myself or us just to, you know, scrutinize the government for decisions they make when, you know, frankly, it's probably way over all of our heads. But numbers are numbers, and you know, if you are immigrating 500,000 people and there's no plans to slow that down, and there's a lot of roadblocks to build homes. That's just a recipe that doesn't work. It's the supply and demand of everything, right? And so what's interesting is that Alberta's sort of benefiting from this because people are fleeing BC and Ontario. I came out here to BC 2 years ago, and I'm back in, what is it, 42 days? I think I'm back in Edmonton. So it's beautiful out here, but it is not sustainable. Everything's over $1 million, and it's not just that. There's provincial sales tax, and heck, we're on an island, so it just costs more to get everything here. So everything's a little bit more inflated. And the interesting thing with immigration too that I want to point out is long term, immigration's good, right? Because you'll have more people buying homes, more people in the workforce, more people contributing to the economy. So that's good. But in the short term, people need a place to live. So they're driving up inflation. It seems like it's inflationary in the short term. And until they have a job, until they're building up their career and their assets and things, it doesn't really pay off. So interesting strategy nonetheless. I mean, I think we can all, ridicule Trudeau for a lot of things. I think he's not super favorite now. We're all Alberta boys, so maybe we'll save that for another conversation. But one other point on interest rates. So rates were around 3% in 2019, dropped to 1% in 2021, and now they're around 5%. How is this affecting home buyers? Kind of touched on most of this, but if you have anything else to add on this, it's been a roller coaster of interest rates, right? I mean, I know, like Josh mentioned, I mean, the 3-year seems to be pretty popular. Bank of Canada just said that now they don't think that rates will start coming down until mid 2025, which has just been pushed out another 6 months. So, and they were also ones to say that rates will be low for a very, very long time. So who the heck really knows where this thing is going? Maybe the 5-year is now in play. What are you guys seeing from the interest rate? What are you kind of recommending to your clients?
I mean, for me, every situation's different. I think, the first question that you were asking is how's it affecting potential home buyers? I think the unfortunate reality is the fence sitters are really suffering now. So if you were thinking of buying 2 years ago and had the idea that, oh, I'll wait because house prices are going to come down, well, that didn't happen. And rates went up, which normally would be a driver of house prices going down, but that hasn't happened. You just now have a more expensive house and a more expensive interest rate. And guess what? Your qualifying rate's higher, so now you can't even buy the house you thought you could buy. So it's been a real negative situation for any potential buyer that didn't get into the market. And if they're renting now, they also have had a massive increase in their rent, or they're about to when it comes up for renewal. And we haven't seen that happen yet. So I think you're going to have another, fury of renters that go, I need to get out of renting and buy. So I think that's just going to further drive the market. When it comes to what option you should take, the thing I always tell a client is, yes, rates may come down. So you could do a 2-year or a 3-year, but it doesn't mean rates are coming down at the 2-year mark or the 3-year mark. They might come down at a year from now. They might come down 40 months from now. So you're never going to time a rate market perfectly. If you're taking a short-term money, you just need to, if you're of the belief that rates are going to come down, fine, but do the math and accept that you're paying X amount more for the next 3 years. And if rates come down in 2 years, you're paying X amount more for the next 2 years and then paying a penalty to get the advantage of a new rate. So the math just may not move in your favor. You need rates. What does rates coming down really mean? I think this is where some people are, in my opinion, kind of living in a bit of an illusion. Rates coming down doesn't mean they're coming back to 3%. Doesn't mean they're definitely not coming back to 2%. A significant decrease in the Bank of Canada's rates takes us to a 5% prime rate at this point. So I think people have to be very cautious on what a lowering of rates actually means. And the bigger thing is just how long it's going to take. And the Bank of Canada likely will be slow in bringing them down. Things could change and they might do it quickly because they realize they've now crippled economies or whatever it is. But for me, it's really just giving the numbers, and where I think most clients actually are concerned about is that payment right now. That's what they care about. They care about cash flow and payment more than anything. So it's really just showing them that option, and product really matters too now, because if you do have rates drop, making sure you're with the lender that isn't going to have the nastiest payout penalties out there if they do want to break that mortgage is pretty important too.
Quick comment there, Joe. I like what you're saying. Like I started in 2007 and the 5-year fixed was about 5.75, like 5 points. I think it was 5.74 was the 5-year fixed. And it was actually HSBC was the first to come down to 4.99% for a 5-year. And I remember people thought that was crazy. My dad, like, under 5% for a 5-year. He tells me the stories about 18% in the 80s with RBC, so we thought 5% back then was incredible. So we've been really spoiled this last decade. We're seeing rates sub 3% for 5-year money. It was unheard of. So I like what you said about settling. Like, what does settling mean? Because that was, it could be just a little blip in the graph one day that rates were at those historical lows.
And as Joe alluded to, as mortgage brokers, it really is our duty and obligation to help our customer when it comes to payment stability and cash flow analysis. What we do know right now, in conversation with a big bank the other day, is that they were talking about their statistics at the start of this year. The average Canadian was sitting with around $9,000 on secured debt. And now that number is closer to $24,000 in unsecured debt. That was their statistics again. So what we do know is that Canadians are continuing to perhaps service their housing costs and their living costs with unsecured debts or their trade lines. So when a customer does come to us, we have to be very, very conscientious of what their cash flow scenario is and making sure that we are helping them as best as possible to put themselves in the best position when it comes to payment stability, when it comes to their cash flow, and when it comes to their liquidity. If they're servicing their life on unsecured money that's at much higher interest rates, which is also variable to prime, we have to make sure that we're helping them get into a position where they're still decreasing their load on that side. So again, payment stability, cash flow analysis is really, really important right now. It's really, really important for Canadians to be aware of their cash flow scenario and understand how we can help them with that scenario.
Great point, Robbie. When your debt to income ratio is, I think, around $180, so for every $100 we earn or have, we're spending 180 or owe 180. It's outrageous. One final point on this is, for the longest time, I believed that low interest rates are a good thing. And then I started to change my mindset a little bit and think, well, maybe high interest rates are a good thing. Maybe it is a good way to certainly slow down the economy. It'll, certainly hopefully drop house prices in the long run. Now, obviously, there's the supply issue we talked about already. But I just wonder, maybe having higher elevated rates, 5% is not that high, as Josh alluded to back in 2007. But maybe it wouldn't be a bad idea to maintain this level for the next 5 years or so to see what happens to the demand. The issue, I think, is that the rents are going to keep going up. So it almost seems like a lose-lose, but I don't want to leave this as a negative story. I want to change this into a positive story. So I have 3 questions for each of you. You guys decide who wants to take this one. But the first one is, what is one tip that you'd give somebody looking to buy a home this year? Who wants that one?
Lock in as soon as possible. Go ahead, Joe. If you
no, go ahead, take it.
Get your rate locked down as soon as possible. Because right now the trend the bond market went down a little, it's coming back up slowly. I just get pre-approved, get a rate hold in place as soon as you can if you are looking to buy this year. With the volatility, you want to make sure you have that, period.
Secure yourself a good rate, right? Secure yourself a good rate, hold it, protect yourself, make the decision to buy a home in 3 months or whenever you find the right home. Okay.
Yeah, exactly that. Start the conversation early so that we can help you secure a rate. And, our ability as mortgage brokers is that if those rates come down and the bond market moves in our favor and the customer's favor, we can help them get a better rate when they actually do find the home. So having that rate secured early is very, very important. And again, just going back to my last point, making sure that you understand your budget going into home ownership. So understanding what your costs are going to be, and understanding the entire budget and making sure you're comfortable with that.
Second question is, what is one tip you'd give someone who must renew their mortgage in the next year or two?
I'll take that one, I guess. There's kind of two things I think you have to look at. This is kind of Robbie's point on the cash flow analysis. Everyone's scared if their mortgage is coming up. We get a lot of panic calls. When you do the math, it's often not that scary. But there's a lot of opportunity where you can just weather the storm, whether it's we're going to re-amortize your mortgage just to give you some payment relief. We got to look at all of your debts. Let's not just focus on the mortgage, because often the situation is, yeah, your mortgage has gone up a little bit, but if we actually eliminate some of these other debts or re-am you, you're in a better cash flow position. And you mentioned higher interest rates. One of the benefits of higher interest rates, if you have good cash flow management, is you actually can now earn some money on savings, which we haven't had in over a decade. And so as long as you can get in a good cash flow position and manage the debt and also have savings that are earning you interest that we haven't seen in years, you can be in an okay spot and you can ride this out. The thing that we're always looking at renewals is, let's make sure that we have the most flexibility in your mortgage. You can always pay more on your mortgage unless you're in a horrible product, but most products are going to allow you to pay extra. So don't be scared if for the short term you're going to a 30-year AM when your mortgage is coming up for renewal, and a year from now you hammer that down to 25 or 20 or whatever it is. Have that flexibility built in. Pretty much every renewal conversation I have now is a refinance conversation. Whether they do it or not, it's a matter of, let's see if you need it. And so that's the big thing. And the only other thing I would say is, again, start early. There's no risk in hedging money. So it's kind of the one time with a lender that you have the opportunity, risk-free, to play the market. So if you're 4 months out or even 6 months out, hold a rate. If rates keep going up, you're going to want to take advantage, maybe break your mortgage a little early. If they go down, you get the benefit, nothing happens, then you just push it out. So there's a lot of being ahead of it is huge, because if you had held rates a month ago for your renewal, you're sitting a lot better than you are today if you had, right?
All good points there. Last one is, what is one tip you'd give someone searching for a mortgage broker?
Call Mark.
Second the motion.
I echo that sentiment.
Yeah.
Mark.
Oh, that's an easy one. All right. We'll leave that one there. I have one more question before we get to the speed round. I know we're kind of jumping up on time here, but I am curious to get your guys' opinion on tech and AI. So, this is a space that is, I wouldn't say near and dear to my heart, but I'm just really interested in the technology and how the technology helps us. Going back to this, my days at CIBC, where I'm literally driving to Alberta Beach, to Pigeon Lake. I'm driving everywhere to meet clients, to do paper applications, to get paper signatures. I got my laptop. I got to hook up into their Wi-Fi. Sometimes there is no Wi-Fi. Sometimes the dog's barking. It's very inefficient. I did it. I was learning. I learned a lot of things those years. But as soon as I became a mortgage broker in 2019, and then COVID hit shortly after, technology was just thrust into the forefront of everybody's business, not just in the mortgage space, but certainly in most industries. So there's a bunch of different technologies out there that we currently work with. Velocity, Expert Pro, Finmo for application submissions. Then you got cool innovations like Lender Spotlight, where we can show clients or just have for ourselves all of the policies and all the products at one spot. And of course, something as simple as what we're doing right now, just Zoom calls. So I'm curious to know what your opinion is on the trends, what you see happening in the mortgage space. There's that Rocket Mortgage, get pre-approved in 60 seconds in the US. Lots of things are happening. Where is this going? How does this help us, and where is this going?
I'm jumping in, boys. A lot
Get in there.
near and dear to me too, Mark. Two things have happened, I think. Number one, that have really accelerated tech. Number one, I'm going to give credit to a group that doesn't often get a lot of credit, and that's the millennials. They are very tech forward, tech savvy. They helped propel our industry, in my opinion, because they're good with the quick Zoom. They want to move fast, right? And we are able to, as brokers. Sometimes I find we have to slow it down. We have to say, okay, no, we need to get on a call. I would like to do a detailed commitment review with you so you know what it is. But they can move quick, which helps us to move quick as well, and to ultimately do more volume. The second, of course, is what you said, is COVID. COVID, I think your term was thrust, and it did. Like, when did Zoom become just normal for everyone because of COVID, right? There was a silver lining with COVID. It was certainly not a great time, but there are some good things that have come out of it. And that's that everyone is a little more tech forward now because of it. And so I think there's a lot of great things happening. Lender Spotlight's a tool that I use quite often. It's a good starting point, a good reference. There's a lot of technologies out there that help the broker to grow their business just from setting. You do the work once. I was explaining to my wife, like, look at this. We will do all this work one time, build the process, but then there's automation now that keeps connecting with your client, keeps you top of mind, so that you're active and current when you otherwise couldn't, because you only have so many hours in a day. Now, as far as the 30-second pre-approvals, the rockets, etc., without getting too deep on it, I often find that those pre-approvals aren't worth the paper they're written on. As regulations change, as mortgages become harder, and they are, the qualification is harder with rates climbing. That's added another element. The AI just, I find, isn't able to keep up with how fast everything is changing. And so maybe there'll be a day where it can, but you've even seen in the US, Joe, correct me if I'm wrong, because we've chatted about this, I believe, is that your big brokers in the United States, where Rocket Mortgage is really thriving, taking off, the successful brokers are even more successful than they've ever been before. They still have their market share. They're not out. People still like to speak to a trusted advisor. And a lot of times these Rocket Mortgages, as well as others, which I'll leave unnamed, you're really just getting thrown into a call center, kind of a hub, so to speak, where you don't have that intimate relationship with a broker who's there with you from start to finish. So some people panic about it. I personally am not. Maybe I'm naive, but I'm confident that there'll still be a place for us. And as long as we use tech ourselves, we can continue forward. Ooh, I kind of ran out of wind there.
I like
Sorry.
that.
Yeah.
AI and technology are going to help the best brokers be even better. They're going to help customer-facing communication be even better. They're going to help all of these processes, as we've seen through COVID, become better. As Josh mentioned, I don't see that human element going away. The reality is that there's so many different variables when it comes to a mortgage scenario. As simple as the customers, maybe having a life event that's occurring 6 months later that, they're making you aware of. That's something that, at this stage, AI could not be responsible to process correctly for the customer. So I think there's a lot of different elements to a mortgage scenario that at this point doesn't take the human connection or the human value away.
I just want to add one thing, and this is from a lender standpoint. I do think that as great as the Canadian banking system is, and the strength of the Canadian banking system, it is extremely weak when it comes to technology. And it's probably one of the worst in the world when it comes to how it communicates, not having a proper open banking system. And so I think the big change that will actually have an impact on not eliminating brokers, but making brokers more efficient and really helping lenders with underwriting is a more open banking system with verified documents that effectively can happen is the next step to brokering. So lenders all want it. There's programs out there like Finks and stuff that are trying to do it, but it's not right yet. But if we get to the point where, CRA actually allows direct income verification and we have actual banks just providing verified documentation for the purposes of mortgage financing, it eliminates so much fraud, it eliminates so much manpower and human resources that go into underwriting a mortgage. And then you're not going to get out of that, someone actually has to look at this, figure out the story, but so much time and energy is spent on things that should be just automatic that I think it will make brokers more efficient and lenders. So I'm actually excited about the tech, because that's where I think it goes. I don't think it replaces a mortgage underwriter or a mortgage broker. It just allows them to all do way more than they're doing because they're not focused in the stuff they shouldn't be.
Yeah, it makes everyone stronger.
I miss my automated T1s. Come back. How
Yeah.
easy was life when you just had the T1s at your disposal? It's
Yeah.
wonderful. Great points, guys. And I agree with all of you guys. I mean, it's obviously a marriage, right? You know, the technology helps us, but you need the human element as well. And we have so much technology that's evolved the last couple of years that has helped us. But it seems like we certainly have a long way to go. I don't know. Would it be fair to say that 70% of our job is administrative, right? Collecting docs, chasing paper, going through bank statements, sourcing things. It's a nightmare. So once the tech gets there, I think I agree with you, Joe. I think it'll be just way more efficient. And I think our value will probably shine through even more because we're probably not that good at all that document chasing, right? I mean, it's cumbersome, it's time consuming. Nobody wants to do it. But anyways, that's great. Now it's time for the speed round. We have a couple more minutes. Hopefully we can get through this. This speed round I came up with was just a fun way to end the call. Some of it's not even mortgage related. And it's just a way for people to get to know you, my guests, a little bit better on a deeper level. So I got about 10 questions here. It's like a this or that sort of deal. So I'm just going to lay out the question. Just tell me what your preference is. You don't have to explain yourself. We'll go round the horn and then we'll end it there. So you guys ready? Drum roll.
Ready.
Okay, so let's maybe start with Joe. House or condo?
House.
And then I guess
House.
Robbie or Josh or
House. Sorry, Robbie, I took it.
House unless it's a condo on the beach.
okay. Fixed or variable?
Fixed.
I've always been variable, so I'll just say I'll stay variable, but I don't feel that way today.
I've recently gravitated to fixed, typically variable.
Yeah. Big city or small town?
Big city.
Big city or boonies. I don't want no small towns.
I call Calgary the big city that feels like a small town. Calgary's is big enough for me.
Okay. Bank or non-bank?
Non-bank.
What's the
I'm going
product?
non-bank.
Could mean anything. Could mean anything. What's your view, your feeling on it?
Non-bank. Broker.
Non-bank.
Lower payout penalties. I just said fixed, and I always say variable as well. So lower payout penalties if you need to.
Okay, what about self-brokerage or financial advisor? You like to handle things yourself or have someone run your finances?
Oh, I'm not self, so financial. That's not my wheelhouse. I don't have time for that.
I dabble, but the the brokerage is better.
Brokerage.
Okay, all right. This one's kind of fun. More money or more time?
Time.
Time.
Time's not coming back.
It's kind of a trick question. 'Cause I guess if you have money, you probably have time. But anyways, a couple more. If you could live anywhere in the world, where would it be?
Calgary, Alberta, Canada.
Oh, come on.
I'm serious. I love it here, and I feel that I like to travel. I feel that when you do travel, you appreciate those spots, but home is home.
Yeah.
I'm with Robbie. My friends joke around and call me Mr. Mr. Calgary. I love Calgary. You could everywhere you could go. I do love Hawaii though. I'll put that on there.
Oh man, I don't want to say Calgary. I love Calgary, but that seems boring.
Yeah.
I'm probably going to Italy. Like, why would I not go to Italy? Go in Italy.
That's a good one. No one said Italy yet. A lot of Hawaii's, Mexico's, Caribbean, United States. And to be fair, I mean, yeah, Calgary is if one of the coolest cities in Canada for sure. Every time I go to Calgary, there's this energy in Calgary, especially when you're in Victoria all the time. There's it's a slower vibe out here, right? But I love Calgary too. I've been to Italy once. That's a pretty cool spot. What is your favorite pastime? What do you do when you're not doing mortgages?
Listen to music.
Well, I've got 2 young kids at home, so I'll be sleeping. That's my hobby right now.
Yeah.
Fishing.
Okay. So to Joe's point here, what kind of music are you listening to these days? Genre, band, artist, whatever. What are you guys listening to?
Well, there's 2 types of music this week: country and western. I'm really into blues though. That's my main jam. Blues music.
Okay.
I'm loving Zach Bryan right now. Can't get enough.
See, country.
I'm going jazz right now. I'm going through a bit of a jazz phase. So that's what's playing in my office most days.
Some eclectic vibes in there. Okay. You know who else loves jazz is Ed at Equitable. He's big into jazz. I guess his dad played jazz or blues. So yeah, small world. Last one. What's the last book you guys read?
Fall of Giants.
Happiness Advantage.
Ooh, good one.
Josh?
Oh, Atomic Habits.
Oh, I love that one. That's a good one. The last one I read was this one here. Let's see. Oh,
Oh,
See it?
Oh, you've disappeared.
there we go.
outlet.
Oh wow.
Longevity, health span, some good stuff in there. I guess once you kind of hit 40, you just start to think about the long game, right?
Mark, they don't know anything about that yet, these 2.
Yeah, that's right.
I feel you though.
Hey, I appreciate you guys jumping on today. This has been fun. Where can people find you online or social media or otherwise?
Well, if you need a mortgage, again, Mark at mortgageconnection.ca. That's where.
Thanks,
Mortgageconnection.ca, buddy.
Yeah, just find us there. You'll see us all there with our
Or
floating
in
heads.
Calgary, as you've heard.
Amazing. Josh, Joe, Robbie, thanks for doing this today, guys.
Thank you.
Thank you, Mark. That was fun.